Today, crypto's in the red again ahead of the Fed's decision on rates this week. Kraken's Tomas Perfumo breaks down the findings of the crypto exchange's new OTC report, and Mizuho's Dan Dolev discusses what the Genius Act means for PayPal's future. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Digital currencies in the red again this morning as investors await this week's rate decision from the Fed. By noon Eastern, Bitcoin dropped to the $117,000 level, Ether fell to $3,760, and XRP sank to $3.09. Taking a look at some crypto-focused stocks, Coinbase falling more than 2.5% as of noon, after Citigroup hiked its price target for Coinbase by 87% to $505 from $270. The new target suggests the stock still has roughly 33% potential upside. According to Citigroup Global Markets, the crypto exchange stands to gain from legislative momentum, as well as stronger Bitcoin prices and improved custodial fee revenue. Turning to Bitmine, shares sliding 7.4% as of midday after the Ether treasury firm unveiled a $1 billion share buyback program. The move comes as Bitmine's crypto and cash holdings have ballooned to $2.77 billion. That includes the company's ETH holdings, which total 625,000 tokens. PayPal shares plunged more than 9% after the digital payment giant reported better than expected results for the second quarter this morning, but saw slowing growth in transaction margin dollars, a key measure of profitability. Yesterday, PayPal announced it was launching a new service which would allow businesses to accept payments in more than 100 cryptocurrencies. And eToro shares dropping nearly 5% as of noon after the retail trading platform's CEO announced a major step in the company's long-term vision for a tokenized future. In a global webinar, CEO Yoni Assia announced an expansion of 24/5 trading to a total of 100 U.S. stocks and ETFs, along with the launch of spot-quoted futures. The firm also plans to issue tokenized U.S. equities as ERC20 tokens. Late last month, Robinhood, another popular retail trading platform, launched stock tokens, which allows EU customers to get exposure to the U.S. stock market. All right, sticking with markets for our main story. Kraken just dropped its new OTC report last week, signaling that the crypto market is still bullish. I spoke with Kraken's Tomas Perfumo, a global economist at the crypto exchange, about the report and what we can expect from major cryptocurrencies in the months to come. Kraken released a new report last week, noting that Bitcoin hit a new all-time high earlier this month, above $123,000, and has since pulled back modestly. So I'm curious for your take on what factors helped catapult Bitcoin to that new record, and why do you think we saw a modest pullback?
Yeah, I think the stage we're in within the market cycle, I would say we're pretty mature in this bull market, at least compared to historical standards. But there aren't those kind of peak market cycle euphoria signs that I've seen yet. That remains absent in this market. And so when you think about the recent activity in the last month, 2 months or so, a lot of it has been driven by this institutional demand coming through Bitcoin ETFs, for example, coming through MicroStrategy and the proliferation of these publicly traded crypto treasury vehicles. And so that's really the bulk, I think, of a lot of the spot demand that's been pushing the prices up, of course, with the backdrop of let's call it a healthier risk-on environment in broader risk assets like equities, for example. But a lot of it has to do with the spot buying from these institutional vehicles that we're seeing.
And the report also notes that despite the retracement, the broader structure remains firmly bullish, with price holding above all key exponential moving averages and continuing to trade within the upper bounds of its ascending channel. As of noon today, Bitcoin is trading above $117,000. Yesterday, it was trading at the $118,000 level. So where do you see Bitcoin heading in the months to come? And do you think it could surpass that new record above $123,000? If so, what would it take?
Yeah, I can't give specific price predictions, but I'll kind of give you a frame of reference for how I think about the situation. So naturally, with commodities like Bitcoin, it really comes down to that supply-demand story. And framing the supply side, super simple. As of today, about 95% of all Bitcoins that will ever exist have already been mined. They're already in circulation. And so in order to handle demand, it's really coming from the secondary markets, people buying and selling on exchanges, for example, because not enough is being mined. So to give you a frame of reference here, MicroStrategy alone has purchased about $16 billion of Bitcoin just this year alone. Bitcoin ETFs collectively another $20 billion of Bitcoin. and you have a whole onslaught of other vehicles that are coming in and purchasing more Bitcoin, on top of the fact that individuals, for example, savers, investors, RIAs, etc., are also getting involved in the market as well. So you have this influx of demand coming in and chasing this coin that has very limited supply, at least limited new supply. And so naturally speaking, that push applies pressure on the price upwards.
Turning to ETH, Kraken's report out last week notes that the cryptocurrency has broken decisively above the long-standing pivot at 2813, a level that had capped price for more than a year. Now, the report notes that this breakout marks a significant structural shift and clears the path towards the next major resistance zone near $4,000. As of noon today, Ether is trading above $3,700, and yesterday it traded above $3,800. So how do you explain what's going on with Ether? What are some of the factors propelling Ether to this new threshold? It seems like most of the momentum is behind ETH at the moment. So what's the main driver right now?
It's really a narrative shift. I mean, throughout the majority of this year, the first half, certainly, the narrative around altcoins and Ether in particular has been pretty negative. I mean, Ether has been vastly underperforming Bitcoin, right? So Ether's not even it has not even crossed all-time high from 2021 of north of closer to $5,000. I think it was around $4,800. And so if you were just to extrapolate and say, hey, if Ether's price performed as well as Bitcoin versus the last cycle peak, Ether would be closer to like $10,000 a coin, right? So a lot of what we're seeing in Ether, in my opinion, is like playing a little bit of catch up. But when it comes to the altcoins in particular, I think a lot of the narrative is around where we are in the market cycle and how it's going to play out from here. So for example, right now, Bitcoin dominance is around 60% of total crypto market cap as a category. That's actually very high. It's typically, that's the kind of level you might typically see when crypto markets are in a bear market, in like a deep bear market. Usually you see market cycle peaks, that is when all assets are kind of hitting all-time highs together, when Bitcoin's dominance is closer to 40%. And so what we haven't seen is that big trend shift from a lot of people got excited around Bitcoin, made a lot of money, and then they started rotating that into higher risk assets like Ether, like these other altcoins that have, when I say higher risk, higher volatility. And so we haven't seen that kind of progression through the market cycle yet. So I would say that what you're seeing more recently with, the call it 50% or so plus gain in Ether is more of a catch up of the underperformance that we've seen year to date versus Bitcoin.
Now, we've been hearing a lot lately about publicly traded companies turning to ETH for their treasury strategies. A month ago, BitMine announced a $250 million private placement to implement a buying strategy around Ether, which it aims to make its primary treasury reserve asset. Earlier this month, another publicly traded company, Bit Digital, shifted its entire treasury to Ether. SharpLink Gaming is another example. What do you think about this trend, and do you see it continuing?
Well, certainly in a free market environment where people see opportunity, they're going to take advantage of that. And what I mean, I think Michael Saylor actually discussed this pretty recently, maybe in the last few months, this concept that there's a lot of publicly traded companies that are kind of just day-to-day surviving, but they're not really doing anything that's going to accrete a massive amount of value. And so you have a lot of these companies that are now identifying, hey, maybe I do a wholesale pivot into a different strategy, and I'm looking at crypto markets as a potential asset class where I can do that in. And so you have these companies now pivoting into these crypto treasury vehicle strategies. And I think a lot of the target around assets like Solana, Ether, et cetera, is recognition that with Bitcoin, you already have an enormous player, MicroStrategy. They have a lot of scale efficiency and economy when it comes to raising capital and whatnot. It's very hard to compete on that level. And so they're looking at other assets like Ether, Solana, where you have it's kind of like proven product market fit. These are assets that, of course, are supporting ecosystems underneath it, where people have demand for the commodity, naturally speaking, and they're identifying opportunities where they might be able to do some things a little bit differently. For example, with Bitcoin, you can't earn a staking yield, but with Solana, with Ether, et cetera, you can actually earn a yield on those holdings, and it's something that the ETFs haven't yet taken advantage of. So it's one way to position the treasury vehicle a little bit differently than what you can get in the market today. So I do think that we're going to see this kind of ongoing trend of, as long as the opportunity exists, of people naturally looking to create more of these vehicles. I do think we might end up overextending ourselves and then at some point in the future going through a wave of consolidation.
Now, Perfumo also discusses where he thinks the stablecoin space is headed now that they are regulated here in the U.S. You'll be able to check out his full interview over at cnbc.com/crypto world. Now, turning back to PayPal, the company was the first major U.S. financial institution to launch a dollar-backed stablecoin back in 2023. Crypto World's Mackenzie Sagalos spoke to Dan Dolev of Mizuho to find out what stablecoins mean for the future of PayPal's business, especially with the recent passage of the Genius Act.
So, Dan, the Genius Act just became law, marking the first major U.S. legislation on stablecoins. With PayPal's PYUSD already in market, what do you think this means for their competitive position in fintech? And does it move the needle for them long term?
I actually think this is great for PayPal. And the reason for that is because unlike some of the other stablecoin providers, they are the only ones that have a two-sided network, right? So they have like almost 400 million users on the one side and 30 million merchants on the other side. And having a stable coin of their own can actually give them a lot of power globally to facilitate transactions. So I think the PayPal is probably one of the biggest beneficiaries of stablecoin on the positive side.
Now, we've seen players like Fiserv begin developing their own stablecoins, and MasterCard is actively partnering across the ecosystem. Are stablecoins now a clear part of the payment rails race? And where does that leave PayPal relative to the Visas and MasterCards of the world?
So there's two things to keep in mind here. One, stablecoins are very important when it comes to remittance and when it comes to B2B corporate payments. I don't think they're going to be impactful when it comes to just general consumer payments. So I don't think necessarily like it's a bad thing for Visa or MasterCard, right? I think like the graveyards are of short sellers are full of people trying to short Visa on this narrative or other narratives, and then it just keeps bouncing back. But what's unique about PayPal versus the other operators that you mentioned is really this two-sided network. So if anyone can actually make use of it, because they are engaged with remittances, right? They have Zoom, which is like a remittance network. PayPal could actually be a facilitating stablecoin transactions, and the other guys, it's just very tough to see any consumer payments running through stablecoin these days.
Now, some had worried that stablecoins could disrupt traditional fee-based models, but to your point, it seems like they may actually help networks like MasterCard move money faster without eroding interchange. What's your read on how this ultimately affects profitability for the legacy card networks and for PayPal?
Yeah, it's a good question, because right now, if you think about there's two payments, big payment forms, credit and debit. So if you think about credit, it is expensive, right? Interchange could be like in the high twos, but what really is that you're offering a lot of value because you're offering rewards, you're offering points. Like stablecoin cannot offer points. Now you get reward right now, which is yield, but what's going to happen when rates come down? Cards are still going to be offering like miles and rewards for the 3%, but stablecoin is not going to be able to do that. And when it comes to debit, 2/3 of debit is regulated in the US, which is only 21 cents and 5 basis points. It's very hard to compete with those pricing. It's like bare bones pricing. So that's why we don't necessarily see disruption to the pricing, to your question, on the consumer side. Yes, on the remittance, but not on the consumer side.
Do you see this stablecoin momentum nudging PayPal closer to being seen as infrastructure, a peer to Visa and MasterCard, or is it still fundamentally a consumer-facing product in terms of the way that investors see it?
It's a great point. If they play it right, and I hadn't thought about it, so thank you for this definition. Really, it's an infrastructure play. Right, just like Visa and MasterCard are infrastructure plays in payments, PayPal could be the infrastructure play in stablecoin payments down the road, but they have to play it right? Like we're in the uncharted, unknown territory, and if anyone has a chance to do it, it's PayPal.
Now, more broadly, are there signs that crypto infrastructure like stablecoins and blockchain rails is finally creating a tangible uplift for mainstream fintechs like PayPal? Or is that still mostly hype when it comes to earnings impact?
it won't impact earnings right now. The only companies that are going to benefit from stablecoin per se is Circle, which we have an underperform on, and Coinbase, where we're actually constructive. We're neutral, but we're very constructive. Coinbase actually makes a lot of money from Circle's USDC. So that should, any volumes from there should be very beneficial to Coinbase. That's pretty much the only pocket right now in payments that is seeing a tangible numerical impact from stable coins.
Finally, Robinhood reports Wednesday after the bell. It's leaned into perpetuals and tokenized equities abroad, while PayPal is really doubling down on stablecoins at home. How are you thinking about the divergence in crypto strategy between the two, and who's better positioned heading into the second half of the year?
Look, Robinhood is by far the Rolls Royce of fintech, right? Or the Porsche, or the any fancy car that you can think of that I cannot afford. But this is we're utterly bullish about Robinhood, right? So their strategy is a little different. They're going. You were in Europe recently, and I missed that event. Sounded like it was amazing. They're going to be tokenizing equity. They're going to be offering tokenized privates for investors. They're getting deep into Europe. So all these things are great for Robinhood, and it should accelerate the number of users that are using it in a very rapid manner. Plus, Asia is coming down the road too. So you should see those monthly users or annual users accreting upwards, and that's the number one catalyst we're watching.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.